You're listening to REIA Radio, the nationally trusted name in real estate investing. We dig deep to discover investors' why in real estate. If you want to skip all the BS and get in investors' heads, you're in the right spot. Be one of the thousands to check out REIARadio.com.
You never really hit a comfort zone. You're always growing. I think it's just human nature to always be growing. You can hit a goal and just be in the best place in life, but you don't sit too long, right?
This episode is brought to you by PropStream.com.
PropStream is one of the most trusted real estate data software solutions. PropStream benefits all real estate professionals. You can find properties and contact homeowners on the go with PropStream's mobile app. We offer free academy courses tailored to real estate investors and agents. Take advantage of our live webinar demos to learn the software and scale your real estate business. Visit www.propstream.com and sign up for your 7-day free trial to get more leads and grow your business.
Welcome to REIA Radio, episode 156 with David Welte. That's a strong name right there. I mean, it went really well. But
do you practice that in the shower?
Yes,
by the way?
every morning. I'm like, what's the name?
Voices.
What's the name I gotta say today? And then I get in the shower, and then I make sure I turn the fan off to get the correct pitch. Okay, so the first question I have for you, Dave, is how is Owen as a landlord?
That's not fair.
Well, I didn't even realize Owen was a landlord, until
the building collapsed.
Where Ted's coming from that is we are a tenant, or we're a tenant, however you want to put it, in Owen's building in Council Bluffs that he's talked about so often that flooded. So how is Owen as a landlord? I didn't even know Owen was my landlord.
You had no idea?
No. Owen and the group bought it from a dentist. A dentist actually owned it, and super nice guy, just a dentist in Council Bluffs, and he had his receptionist manage the building, and it was a good building. So I didn't even know Owen was an owner until it flooded. Yeah.
But now that you know,
yeah.
How does that change things?
Oh, it's all good. I love Owen, so it makes it more interesting actually, and I love Owen's partners too. They're all great guys, and it actually makes me want to stay, and it makes us want to come back because the building is an awesome building. Being a title guy, you become kind of a history buff, so you learn to love the nerdy old books and the old buildings, and you really learn to love history, so to be in that building, I love it, and I've always loved it. So now that it's going to get a facelift, so it's going to be an awesome old building in Council Bluffs, Iowa, downtown, that's going to have a fresh coat of paint and some nice updates to it. It's really a nice building. And
you got some great leverage now that you can go right to him like, hey, dude, where's the homie hookup now?
Oh, great.
That could go both ways, though.
I won't lie. Now that we're on the podcast, I'm going to throw him under the bus a little bit. When he was talking about this building last time and he talked about a tenant coming back, I was a little upset that he didn't give me a shout out to say, hey, Midwest Title was in our building and they're the first ones to come back. So
well, I mean, we haven't gotten a deposit yet. That's all I'm saying.
Yeah, all fair. But at the end of the day, it's a cool building. It's a cool investment for Owen and his group. Council Bluffs is such a cool community. Us Nebraskans, give it kind of a bad rap, but honestly, I would move to Iowa if my wife would let me. I would move to Council Bluffs.
It'd be a lot cheaper.
Cheaper. It's just a really cool area. It's got a lot to offer. So, and I love Nebraska, don't get me wrong, but that area of Iowa is a really nice area. There's a lot of potential in Council Bluffs.
You mentioned old titles. Have you ran across something that has been like super crazy when it comes to some old title paperwork?
As nerdy as it sounds, I love abstracts. When people bring their abstracts in to retire them, I keep them. I want to make like some sort of office decor that involves abstract.
And that's like the meets and bounds.
You could do like you could do paint like a collage of them on the wall. That'd be cool.
Yeah. In Nebraska, they're non-existent. in Iowa, they're still pretty prevalent. Council Bluffs, Potawatomi County, they actually have an exemption with the state, which I can dive into later. But all other counties in Iowa, the abstract still has importance, and I just think they're cool.
For anybody that's not a realtor that's listening, what is an abstract title?
Yeah. So an abstract is a history. So all the records are kept at the county level at the courthouse, right? So anybody can go into a county courthouse and research their title, but the abstract is basically a book that is passed on to each owner of the property that has a complete history of the property, and is kept up to date through the transactions or at the point at the time a property is sold in Iowa. And if you like history, it's the history of your home or the parcel of real estate that you purchase.
So my newest investment property is 1900.
Okay.
And so I would love to hear some history about like properties I have, but they're all in Omaha.
Yeah. Once in a while, you still run across an abstract in Omaha. When we do a closing, the seller will bring in the abstract. Do you need this? And we're like, no, unfortunately, we don't need it in Nebraska. The way I understand it, I mean, in a lot of people think that if I purchase title insurance, I get my title commitment, my title policy, but some people want to waive it. And it's the opposite of not purchasing title insurance isn't no title insurance. It's abstracting title opinion, things of that nature. And people had them in Nebraska. And I believe title insurance became a thing in probably like the 80s. So really up until about the 70s, early 80s, there was still a lot of abstracting done in Nebraska.
I went on this buying spree of foreclosure properties in kind of during the great financial crisis.
Perfect. Yeah.
Bought a whole bunch of them in Council Bluffs.
Yeah.
And the bank that I did a lot of loans with at the time, Malvern Bank, they required abstract because
state charter.
Yes. And even though Potawatomi County technically has that exemption, they still required it as the bank.
Yeah.
And at one point, so I would do all these, right, and I'd have to get the abstract either updated, but most of them were foreclosures, so I didn't have access to them. So they had to recreate them from scratch, which is expensive. It's a lot more expensive than title insurance. But I had, and they're thick, right? I mean, they're like half inch, inch and a half thick, depending on how old the property is, how many times it's changed hands.
I want to see one.
They're cool. Oh, I have a whole bunch. I'll give you one. But we were joking at one point because when I'd get these, the bank would get them and they'd be like, "Do you want this? Like, where can we send this? Or whatever." I'm like, "Can you guys just keep it? Like, keep it in my file."
Safety deposit.
And so here's the funny part though. I was doing so many of these that at one point they were joking that they needed a new wing of the bank just for the abstracts I had because they're so big,
that's awesome,
and bulky.
Yeah.
But they are really interesting. I mean, after you've seen a few of them, you kind of get the idea. But it goes all the way back to the original date that the ownership changed hands.
Yeah.
It's cool.
Yeah. A lot of people don't realize that, the federal government owned the land,
well, they still do. They tax us.
Yeah. And then it was generally then given or sold to a soldier, or the railroad has a lot to do with it. And then those abstracts go back to what's called the patent when the federal government released or those properties became sellable, deedable.
Is Iowa one of only 2 states that do abstracting now? It's Alaska and Iowa, is that right?
Oklahoma still run across a few states that do it, but a lot of them do them in conjunction with title insurance. So they're conflicting. They're just different methods, but Iowa may be the only state that truly enforces having an abstract and whatnot. And actually, in a weird way, in a non-political way, they push title insurance out. They actually have their own state-funded title guarantee product, which is a competitor of title insurance.
Now, I'm curious if you know this, because I wish I would have researched this a little bit more before the podcast, but it was my understanding that there was like this cabal of lawyers or judges in Des Moines, Iowa.
Well, it's all political.
That got together and basically came up with this thing where they said, "No, we're an abstract state." And just drew a line in the sand and said, "Nope, we're not doing title insurance or title guarantee."
Well, we title insurers are laymen. We're not attorneys, right? So here you have this product that is now introduced that is an insurance product, and it cuts out the abstractors and those who do the title opinions. So the traditional process pre-title insurance is you have a county approved abstractor and they have a title plant. They are the only ones that can bring an abstract up to date. And then the abstract is then passed to an attorney that represents the buyer. The attorneys do an opinion on that abstract, and then that opinion sets out the requirements that are needed for whomever is closing it to facilitate the transaction. So the title insurance cuts out the attorney in some way.
So they were basically doing that to
Correct.
keep their
Yes,
revenue stream
Yes, sir.
ongoing.
Yes, sir.
That is so crazy.
It is. Nothing against attorneys. We need attorneys as title insurers. We
Sure.
still rely heavily on attorneys when there's clouds on title to help us resolve the title cloud and get the project to the closing table. But for whatever odd reason, Iowa they fight the title insurance process, and for lack of a better term, I can't quote the statute, but there are certain points where it's illegal for a buyer to pay for title insurance. Therefore, their state-funded Iowa Title Guarantee in that region is becoming more prevalent. And what had happened, so I've been in the business roughly 24 years, coming up on 24 years. And when we
you know title insurance.
Title insurance. Actually, our first transactions were done in Iowa, and at the end of the day, our title insurer said if somebody in Iowa orders a title insurance product, you can sell them title insurance, but you have to be licensed or based out of state. If Midwest Title wanted to solely operate as a title insurer in the state of Iowa, we could not. We have to be based out in Nebraska, and people in Iowa can come across state lines and purchase title insurance. And that's why Pottawatomie County has the exemption, is because Pottawatomie County is heavily influenced by the Nebraska real estate processes. All the big real estate companies work in Pottawatomie County. It's a big metropolitan western county in Iowa. They have an exemption. But at the end of the day, if a non-depository mortgage lender or a state chartered bank is providing the funds for a purchase, you have to use their product, title guarantee, and the attorney opinion and the abstract in lieu of title insurance. And that's what dictates it.
What is the what's the maybe main difference or differences between a title guarantee product and title insurance?
At this point in time, there is no difference. They are equivalent per se. So it's where this Iowa title guarantee is funded, or I'm sorry, is guaranteed by the Iowa Investment Authority, IFA. Does that sound right? Or
Sure.
Yeah. So I just got to think. I apologize. So I want to make sure I'm giving accurate information. But at the end of the day, title insurance is backed by title insurers: Old Republic National Title Insurance Company, First American, Stewart Title, Fidelity National Title Insurance. Those are the entities and the underwriters that give us agents our backing per se, to where title guarantee is issued by Iowa Finance Authority and is the equivalent product to title insurance, or the competing product to title insurance. Because you go to these mortgage servicers, and let's cut originators out. Originators are the banks. But when your mortgage is sold to a servicer, they just want they want some sort of document or reassurance that they have first lien on the property. So in the event of foreclosure, they're covered. So whether it be title insurance or title guarantee, they don't care. But since Iowa was so entrenched into the abstract and the title guarantee process, they've really become strong in the Iowa title guarantee process, and they've come up with a product to compete with title insurance.
Interesting. Now, what were you going to say, Ted?
I know that when you do a listing contract, or not a listing contract, but a purchase contract, in there it offers an option for basic title or extended title.
Yeah.
And can you explain what that is to the listeners?
Of course. I would probably say, and I'll ask. I'm gonna put Owen on the spot here. Owen, how many?
Better Owen than me.
Yeah, it's all good. Or either of you. Either of you.
Don't put Owen on the spot.
Because both of you have purchased multiple parcels of real estate. How many times have you read your title insurance policy?
Never.
Perfect. Yep. Ted, same thing?
No, I've read it once through, but it's been a long time.
Yeah.
Because I made a point when I got into real estate to read all those documents through.
Yep. So what a lot of people look at when they get their title insurance policy, there's three parts of that title insurance commitment or policy that they're looking at. They're looking at Schedule A, which is kind of who the proposed insured. So the owner, the lender, who's entitled currently in the legal description. Schedule B2 are the requirements. It's the instruction to the closing agent or whomever is involved to meet certain requirements so the policy can be issued. And then the Schedule B2, it's B1, B2. B2 is the exceptions, things that are of record, and we're saying, hey, you review these because you're purchasing the property subject to, per se. So then you have your title policy. So that was the commitment. The policy are the covered risk, all right? And so Basic has, I believe, 10 or 11 covered risk. Expanded has 20 or 23 covered risk. So Basic only covers 10 items. Since I don't have a policy in front of me, I apologize. I don't have the exact number, but Basic has 10 covered risk, where Expanded has maybe 20 expanded risk.
And the price is a couple $100 difference.
Risk. Yes.
And then
about 30%, 33%. Yeah.
And then basically what coverages are extended versus Basic?
Yeah. And some of get this question quite a bit, and I apologize for not. I wish I had the jackets in front of me so I could line them all out. But the biggest ones around here are that I believe are important to Nebraska properties, or maybe even Iowa properties, are code enforcement or planning department approval type risk, survey risk, and then mechanics liens, construction liens, post-closing type risk.
Well, I do want to walk back my comment earlier about never reading a title insurance policy.
Yeah.
Here's typically what I do as an investor. Sure. I don't read my hazard insurance policy.
Yeah.
I don't read that. Yeah. But I will generally tell my closer at a title company, I'll be like, let us know what do we need to worry about when the title insurance comes back. Just call out anything that's weird.
And that's why I asked
worry.
that question.
Yeah.
Because we as the title, or as the closing, and that's why title and escrow go hand in hand, as you have your title insurance commitment, and we're tying that to, and we're making sure everything is good for closing, right? And that's why title insurance is I don't want to say contested, but people ask, well, what's the need for title insurance compared to general insurance, right? So as an investor, you are going to the closing table with the notion that the title insurance company has done their job and done their due diligence, have been to the courthouse, they've reviewed the documents, they've reviewed everything that could affect the parcel of real estate, they've met the requirements for closing, and so on and so forth. You're assuming that is done.
Yes,
right?
Correct. Yes.
Correct. And then post-closing, the title insurer then takes on the risk for the covered risk, the items that are in the policy jacket. These are the unknowns that you're hoping that this title insurance company will take care of in the event you don't have a clear, good, marketable title post closing. So, and that's the thing about that's the difference between title insurance and general insurance. General insurance, when you're putting insurance on your car, that insurer is giving you insurance based off your age, your claim history, so on and so forth. We're able to really underwrite and review the history and the title before we close it. But again, there's those 10 to 23 covered risk that could happen post closing.
What percentage of people don't do title insurance?
0, because honestly, here's the nitty gritty. Mm-hmm. Closing and title go hand in hand.
Yep.
If you're not purchasing a title product for a closing for a parcel of real estate, you're crazy. Okay, I mean, honestly,
because this does come up as an agent.
It does, and it's actually a really good question. you are making a major investment on real estate. When's the last transaction that you saw is less than $15,000-$20,000? I mean, yeah.
No,
we're talking $100,000, $200,000, $300,000 investments, right?
Starting. Yeah.
That's real money. Okay.
I did buy a house for $1,500 in Decatur, Nebraska.
Well, I'm from Decatur. I know where Decatur's at. I visit often. I could believe that. I actually love Decatur. Decatur's a river town. But
yeah, my first flip was $12,000 purchase.
Yep. But let's talk about that. $1,500 in the grand scheme of things is real money, isn't it?
Sure.
I mean,
but you're putting your money, invest in it, and then if you put $100,000 into renovating that house, which I did.
Correct. How upset would you be if you found that you couldn't sell that or mortgage it? I mean, you'd be pretty upset, wouldn't you?
Yeah.
So title insurance is the vehicle that gives an investor peace of mind that they're going to be able to achieve whatever goal they have for that parcel, whether it be fix and flip, fix and hold, so on and so forth. I mean, there's so many things that can be liens against property: state tax liens, federal tax liens, judgments, mortgages, of course, county taxes, construction liens, child support, alimony. If you went to purchase a property and you're getting, most deals that you guys probably buy, they're probably not
questionable.
They're appeasing to the eye, or they're not appeasing to the eye, right?
Yeah, exactly. There's a lot of drama usually around our properties that we're buying, right?
Correct. Yeah. As an investor, so I would say that for the investor community, title insurance is one of the most important items that you can purchase, because you're probably not getting home inspections. You're probably analyzing if the foundation's cracked or what condition the property is, and you're probably given an offer based off of the physical condition of the property. But you want to know after you acquire that property that you can resell it, mortgage it, so on and so forth. And title insurance is going to be that reassurance that you can do what you want to do.
We had a podcast guest, Clint Blackburn.
Yeah,
on
I love Clint.
Yeah,
he's a Southwest Iowa guy.
Yeah,
love him.
He had this deal where he I don't know if you know about this, Ted. I don't think he talked about it on the podcast, but he actually closed on a deal and found out after the fact that he actually only bought the driveway.
Yeah.
What? Yeah. And the funny thing is, like, he banks at Malvern Bank, and I don't know if I'm supposed to be talking about any of this, but it was hilarious because they called him, they're like, hey, like what you bought this loan is for a driveway. Oops. Like they did the loan paperwork on it, and they did the title work and looked at it and everything, the legal description. They're like, he bought a driveway for like $50,000 or whatever. Yeah. And it was
did it work out in his favor?
I don't know that it's cleared up yet, honestly.
Oh.
Yeah. That sounds like something that was maybe missed. I mean, that's where it gets tricky, is maybe the legal description was given to the attorney incorrectly, or something happened. I hope that's not one of Clint's deals that he did with us. Maybe
the title company rhymes with Midwest title. No, I can't.
Maybe look at that into that. But anyway, stuff like that happens, but that should be easily corrected, because more than likely the intention was to convey the property or the home that goes with that driveway. They maybe have their own legal descriptions. That's generally easily corrected.
Where should you be getting your legal descriptions from? Because if you go to the county assessor page, it says on there you cannot copy this.
Yeah.
But where should you be getting it from?
The deed that gave you title to the property. The deed. I mean, because we go back and it's called your chain of title.
But if I'm a realtor, I don't have access to the deed.
But I'm going to be honest with you. For your purchase contracts, what the assessor provides is probably good enough.
That's what I always do. I always use
but
that.
It says right there in red bold print, you could not use this for real estate.
But remember that's a disclaimer.
Yeah.
That's a disclaimer by the county assessor. What I would tell you guys as investors and anybody listening to the podcast, when you are buying a specific parcel and let's just say there's some vacant ground, or there's additional real estate.
And I had one of these recently. I had a house purchased and it had a huge lot, but we come to find out that there was two houses bulldozed on the same lot.
Make sure the address, because everyone goes off address. So I'm buying 1234 South 30th Street. Well, that's fine. But if you put that on the contract, then we as the title and escrow company are going to work on 1234 South 30th Street, and that might be lot 1. But hey, there's lot 2 here that goes with it. That it could get missed. We have internal checks and balances to where we're now pulling aerials to make sure. Let's just say we do get an order for 1234 South 30th Street, and that is the house and a parcel. We'll check the parcels around it to make sure maybe the vacant lot that you're assumed is part of 1234 South 30th Street is getting conveyed with it.
To just circle back to the title insurance real quick before we wrap that up. Do you guys get a lot of title insurance claims?
There are. Because more than people know.
Because this always comes up, and I hear some horror stories every once in a while.
For sure.
I personally never had one, and then all my clients I've worked with have never had one.
Well, that's
good.
That's a good thing.
Yeah,
that's a good thing.
Yeah, that's drama you don't want.
There's a lot more funding paid out for title defense that are part of the claims process, and then a lot of the agents self-insure, right? So I mean, it's amazing how hard you try not to miss like county taxes in a real estate transaction, but county taxes, for example, can be missed, right? The county could have the taxes wrong on the roll, the searcher could miss something, the title typist can miss something. So if let's just say like there's $1,000 that were supposed to be paid in a transaction that were missed, and now your buyer's going like, I have to pay this $1,000 because it was missed. As an agent, will more than likely self-insure and pay that rather than put it into a claim.
Yeah, because I don't want to. As an agent, I have E&O insurance, and I absolutely do not want my E&O insurance hit. So I'm going to cover that out of pocket.
Correct. So we at Midwest Title, it's okay. My father is an insurance agent before he was a title insurer, so he understands that if you make claims on whatever policy you have, car insurance, homeowner, you're going to get dropped or your rates are going to go up, right? So errors and omissions is vital for us to operate. So we've never put a claim into our errors and omissions. We've just
covered it, self-insured,
or if it is large enough or justified, we turn it over to our underwriter and let our underwriter work through the claim. So the claim, a lot of the title insurance premium, a portion of the title insurance premium goes back to an underwriter, and then an underwriter, when there is a claim, they pay for attorneys for defense of the claim, so on and so forth, or they pay the claim. So a lot of times the consumer doesn't see the title insurance payouts, or claim payout, but there is 100%.
And is there a limit to what title insurance will pay out?
Yeah. Your coverage on the property.
Okay.
So if you buy a $50,000 property, more than likely your owner's coverage is going to be $50,000.
So if I buy a $12,000 property, I'm putting $90,000 into it, and then I'm finding an issue out. Is it covering a 12 or is it covering the full amount?
Well, the owner's policy goes back to the 12, but at the time you improve, you have the option to increase your coverage, and that's going to be based off your improvements, appraisal, so on and so forth.
I did not know that.
Yes. Mm-hmm.
This is news to me.
What's that process look like though? So I
write a check, baby.
So I bought this, and I used you guys on this one, and this one's long gone. So I bought a $12,000 property. It was condemned for 7 years.
Oh, gotcha.
Put $90,000 into it. Is worth $150.
Okay.
Now let's say I'm going to go list this, and there's a family member that thinks they have rights to this property.
Yeah.
What should I have done in this process to make sure I was covered for the amount I have into it?
So at the time you acquired, you got an owner's policy for $12,000.
Yep.
Your lender, who's funding your improvement, got a policy for $90,000. So they covered. Mm-hmm. You can simply ask the title company to issue some sort of construction policy that increases your coverage as improvement goes.
And what's that cost usually to do something like that? In that scenario.
Yep. So the base title insurance is the base title insurance is based off the higher of the two, the loan amount or the purchase price. Okay.
So is this something I should be covering like when I'm closing? Like, hey, we're at the closing table, and I'm like, Dave, hey, I'm buying this for $12,000. I'm about to do a $90,000 renovation. can we cover the title cost right there at the initial closing of the property?
Yeah, we just need to know what your purpose is. What your goal is. If it
dude, you just dropped gold nuggets right here.
You're going to improve that property, right?
Yeah.
So you're going to want coverage at its value at a certain point.
Do you guys ever have those conversations with the people at the table?
We try.
Okay.
We don't always know what the end purpose is. I mean, it probably should be something that's evident.
Because from this point on, I'm gonna have this conversation with you guys every time at closing.
Dude, I'm just picturing this is like a you want fries with that type of a thing. Like, are you doing any work to this property? How much is it gonna be worth when you're done? Would you like to upgrade this to a $200,000
time to supersize?
Policy?
Well, a lot of times you guys acquire a $12,000 property cash, right?
Yeah.
And then you get financing after.
Now, the only thing is, now you did mention, you said your lender's probably going to take out a $90,000 lender policy.
Yep.
But what if you're funding that on your own? Like, what if you buy it for cash and you put your own cash into it, and then? So
we need something to base the coverage off of. We can't just arbitrarily say.
You can't say I'm buying this for $10,000, but I want a $200,000 title policy.
So what do you want to see? Like a rehab estimate?
Appraisal? I don't know. The rehab estimate, that'd be something I would need to take back. The question to verify what you're asking, I would need to take back to underwriters to discuss with them. But let's just say it was something where a lender was involved, an appraisal, right? So
I get a construction loan.
Yep.
And I have to provide my paperwork to the bank to say what my intentions are.
Yeah.
And then they are basing that to give me. They say this is what your appraisal value is.
They're probably getting an appraisal
based on this.
So we need that appraisal.
The pre-appraisal or the futures appraisal, whatever they call it. Yep.
Yep. So we could take that appraisal and we could work and give you coverage, and as draws are happening, to give you coverage as those disbursements are happening.
So it wouldn't be the total amount immediately.
No, it's incremental.
Here's the thing, though, and this is purely anecdotal and my own personal experience, but I've never done this. Like I've done probably, I don't know, like 450, 500, transactions.
Yeah.
Like it's never been on my I'm just saying you probably don't have to worry about it.
No.
Is that fair?
That is fair. That is fair.
If you're playing the numbers here, it's probably like a 1%
playing
chance.
The numbers.
Maybe.
But if you've done 500 transactions, you probably have enough money in your bank account to cover your ass. And versus a person that had where my personal transactions are closer to 20 versus what I've done for clients.
But you guys are working you guys are both working with reputable title companies, making sure those little things are T's crossed, their I's are dotted. Thank you, Owen. To make sure those risks are covered. Again, those covered risk in those policy cannot be found at the courthouse. Those are ifs, but. They don't.
Well, I mean, it's just an interesting conversation. I never knew about any of this.
Yeah.
So.
Well, I'm glad I'm here.
Yeah.
I have another topic related to title I'd like to bring up, which is fraud.
Yes. Gosh darn, yes. We just got hit. This is perfect timing.
Yes. So let's talk about this. So for context here, for a hot minute, I was part owner of a title company, RIP, Galaxy Title.
Yes.
And we opened it and then shut it down probably unceremoniously a year and a half, 2 years later. It was fun while it lasted.
Yeah.
Not sad.
Good.
Yeah.
I'm not sad.
And I know about your fraud.
Yeah. So
everyone kind of knows about
this
it.
is when
Everyone knows, Owen.
Poster. I did not know that everyone knew, but now here it is.
That's okay.
So we had a fraud case that came in, and it was there was a lot of drama to this deal. Can we talk about what are the maybe? Do you have a recent case that we could maybe talk about, or is that we have to kind of talk vaguely?
No, we can talk. No. It's a known claim. We've put it in. We've turned it over to our underwriter. And honestly, your issue I've talked about with my group, and I'm saying, could this happen to us? Because I truly believe what happened to Galaxy could happen to any of us.
Yeah,
it's public record. It got litigated, right? And you guys made it through, right? I think it worked itself out.
Probably. I mean, I'm still alive, and
right. Exactly. Probably maybe cost you some money, and maybe that's a conversation after the fact, because I don't know the details, the internal details. I just know what's of public record, and essentially, you guys is it fair for me to say you guys took a fraudulent cashier's check, right?
Yes.
Yeah. I looked at it. It's in the case file, and I looked at that cashier's check, and it was written on Wells Fargo, I believe, paper. And the only way that somebody could have caught that is if they were educated enough to know what a Wells Fargo certified cashier's check looks like.
Real quick though, my understanding of this, and this has been a couple of years, but is that this person that we're talking about, the criminal, was basically looking for people that had accounts that had adequate money in them in order to have the funds available that he could actually get an actual cashier's check. So he wrote a check off of somebody else's account,
correct,
in Wells Fargo,
right?
So it was a legit check.
The routing and the account number were legitimate, but the check was not. If you compared it to a Wells Fargo cashier's check that is legitimate, it's ugly. It's wrong.
Oh, interesting.
But
okay.
the routing and the account number.
He knows more. He knows more about me than I do.
I just want some popcorn and be able to watch this.
Well, it's a case study. It's a case study because I do not want it to happen to me. Right.
Yeah.
You know. So in fraud is, I mean, that's probably. Oh, you know, I stick to operations, but my father, who owns our company, I mean, fraud is his kind of gig, but I'm kind of on the front lines per se. So he
likes committing fraud. Is that what you're saying?
No, he wants to protect it because if he loses the title company at 69 years old, he's going to dig ditches and he's really scared of that. So we work together. You know, he takes care of the escrow account and whatnot. But what happened to you guys is a case study for us because we want to prevent it.
So to kind of like set the story for this, there was a transaction that happened. There was a dude that bought a.
Can we say this is Owen's failing forward?
As a title company, So this will preface my failing forward.
All similarities to characters, real or fictional, are part of this. I don't know what disclaimer I have to give here, but let's say this happened to a title company. So this dude basically wrote a fake cashier's check out of a Wells Fargo customer's account.
Catch me if you can, right?
Yes, exactly. And he bought a house with it.
Yes.
So closed it.
Yep.
It's his. They moved in.
Deed got filed.
Yep. He moved into it with his partner, and I don't know who all else was living there. But
that's just crazy, by the way.
Yeah. Bought it with.
Am I gonna get?
I'm gonna move in.
Nobody's gonna figure this out.
He should have just wholesaled that thing.
Yeah. So
he should have.
Long track record of criminal activity. This dude, and then so he bought the house using a fake check. Somebody's account that actually had the money in it, so they drafted it. It got caught, obviously, and then he got sent to jail or prison, one of the two, and was refusing to. And so basically, we were like, "Look, man, just sign it back over. Let's unwind this transaction." He completely refused.
Yep.
He's like, "Nope.
Yep.
I'm in jail. Like, make me."
Yeah.
That's basically what he was like. Make me, bro.
Yeah.
And so it went on. This went on a while.
Yep.
And so we racked up some legal fees and everything else. And then the sticky part of this was, if memory serves, this was so early. Like, this was a newer title company, and there was like an exemption period or something where the insurance that we would normally,
really?
Yeah, it would normally cover that.
Yeah.
We were under the window of basically time where it was, anyway, it's kind of a confusing deal, but it was very complicated. And the guy that ended up, there was another dude involved in this transaction on the sell side. Okay. That's a known realtor, investor in Omaha.
I kind of was wondering how he was involved.
Yeah.
With it. Yep.
This took a long time to unwind, but the guy was in prison, facing multiple charges, but his partner, quote unquote, was living in the house still. Mm-hmm. So then you have basically squatters' rights, eviction deals that you had to go through, and the ownership proof. It was a mess.
Yep.
A huge mess.
But he had title.
Yeah, he did. Yeah,
he was insured,
and he paid cash.
Yeah.
I've heard of people doing quick claim deeds that didn't actually own the property. Yep. They sold a huge portfolio for a few grand.
Yep.
And then just took the money and bailed, and then everybody else is left holding the bag, trying to unwind it with there's so many messy things that can happen.
It's ballsy to use a fraudulent check and then move into the house, and it's like saying, "Come get me, come at me."
Yeah, and essentially the person who they use the accounting. They came looking for their money, right? Hey, where'd this $500,000 go? Yeah.
Weird that this
Weird. A month later, I'm missing $500,000.
I know,
Where's
like
it go?
what?
Yeah.
What were you thinking as the person doing this? Like they're never gonna catch me.
Yeah.
Ha ha ha. I'm a mastermind.
So what happened to you isn't common. It's not one of the things that are on the radar of us title insurers that we're looking for. But it can happen. I mean, that's a cashier's check, right? So we have to be very skeptical of cashier's checks. I'm sure, like Ted, you give me as much business as you possibly can. Oh, and I'm always trying to get your business. I love you, but you have your favorites. It's all good, you know. I mean, I want to be your second. That's all I got to say. I know you have a Bernedoodle. My coworker Emily is like scouting you because she loves dogs too.
Oh, that's number 2.
Yes.
Yeah.
New fans all the time.
Yep. Your
Up to
little
3 now.
Your little doodles are your Bernedoodles, right? Am I correct?
Bernese Mountain Dog.
Mountain Dog. Yep.
Yep.
But I was correct on the Bernese part. But
Follow me at odog2424.
Okay, she will. Emily loves dogs.
Dave, real quick on how do you just call the bank and just say, is this check good? We have it from this person.
No, I think on your case, I mean, it would have been up to my coworkers to eye test it to say, man, this is a Wells Fargo check. We've been doing business for 20 years. This does not look like a Wells Fargo check. It would have taken somebody that sharp to figure that out, and that's where I think we're all kind of susceptible to it. But I mean, if your fraudster would have been smarter, they would have got a cashier's check or a picture of one from Wells and copied it exact.
Okay, so you heard it here first. Anybody out there wanting to commit fraud, do what Dave says and get
watch. What is his name?
Catch Me If You
Catch
Can.
Me If You Can. Who's the star in that? What's his?
There's Tom Hanks and Leo DiCaprio.
Great
movie.
That is a great movie.
movie.
Catch Me If You Can.
And he has the airline checks.
Yeah, he was the pilot.
He made the checks.
Pan Am.
Exact. The main fraud schemes are vacant land.
Okay, why is that? No people living there,
and it gives time for them to scheme it a little bit.
Okay.
Yep. Cash, business email compromise schemes, which then are two frauds. That's the fraud. They're intercepting information on a transaction, and they're getting the future homeowner to wire funds to someone other than the title company who they pose as the title and escrow company, and then vice versa, where they're getting the title company to wire to the seller because they've compromised their email instructions.
If I could just take a second to dig into this part. So I've had multiple times where people have hacked my email account or my business partner's email account.
Yeah, stop clicking on those links.
And
correct. You're correct, Ted. Yep.
Basically, well, what I initially found was this is before two-factor authentication was commonplace.
The evolution of it. Yes.
Yep. And so I just had my email and password, and so somebody
Gmail, Yahoo.
Yeah, it was ours was actually Outlook.
Outlook. Yeah.
But yeah, they basically hacked our email, and they had clearly monitored our tone, the types of emails we sent, who we sent them to. They had a whole running history of it.
Correct.
And I saw the email that went to the title company. It was another local title company, not as good as yours.
No.
Obviously,
we are Midwest Title is acceptable, but we have checks and balances in place, which I want to touch on. But go ahead.
So anyway, come to find out, the title company called us and they're like, "Hey, so where is this wire? Like, I just want to verify this wire." And we're like, "What wire?"
Yeah.
And they're like, the email from Brandon, and I'm like, "I don't know what you're talking about."
Yeah.
And we looked, and it was legit. They had copied his signature, his like his whole. It looked exactly like him. And then here's what we noticed. One of the letters in his email address was
slightly changed.
Yes, it was like instead of a
P, it was a Q.
Yes, or instead of a lowercase L, it was a number 1.
Yes,
or something like that. That's
100%.
very, very common from what I understand.
Very common.
So they caught it, thank God, because that could have been bad. But two-factor authentication, and I want to get your take on a lot of this different stuff, but I really started to be a lot more diligent about that. And what they had also done, this was pretty clever.
They're smart people.
Yeah,
it's unfortunate.
They turned off my ability to reply or send an email to Brandon, so it would file into his archive automatically.
Yeah.
So I was like, I sent an email or I reply or whatever, and he's like, I haven't gotten an email from you in like 3 or 4 days, which is super weird.
Yeah.
And and it come to find out it was all routed to his archive. So they had logged in, they hacked the account somehow, logged in. They had set up the email inbox so it was filtering everything, and so we couldn't tell what was going on with this particular transaction. So any email coming from this title company is going to be filtered to this folder. It was a whole elaborate. Obviously, they'd spent a lot of time on this and monitoring the tone of our
smart
email.
People, it's unfortunate.
It was crazy, and what they were trying to do was get us to wire money out of our account. So they had the bank, the title company, and us all looped in on this thing. And they were trying to get like $200,000+. Yeah. And it could have very well happened if the title company had not, or the bank, I don't remember which,
picked it out.
Yeah, they had flagged it and said, "Hey, we want to verify this wire."
Well,
I mean, I guarantee you there are people that are like, as dumb as I sound on some of this stuff, they're way dumber than I am or other people that we're talking about here.
This thing about, you're an educated buyer and seller. Think of this.
Yeah, I've done this so many times.
Think about this if this was happening to your mom or dad.
Oh man, they'd be
or
screwed.
your brother or sister. It's happened to title and escrow companies where generally it's not the title companies, and I will stick up for the title companies because at this point in time, one of our biggest expenses annually is IT at this point in time. We use a management service. Shout out to CSTG, Client Server Technology Group, who keeps us secure, and I love the guys. But I expect a big Christmas present, but we pay them a lot of money to make sure we're covered, and we have two-factor authentication and all these monitored services on our router and our VPNs and so on and so forth. And let's face it, everybody hates two-factor. Everybody hates login services. It is what it is. We have to have it. When you're talking about millions or billions of dollars annually of fraud, it's a must. And I'm sorry you got to log into our portal to get things, but it's just part of it. You have to have the checks and balances in place. Midwest Title, if you email us wire instructions, or if I have my account and my routing number memorized, let me just write it down for you. We will not. And that really comes more from mistake. If you put in your routing number and you get one number wrong, that we're wiring money out that's going to the wrong place, and we'll more than likely get it back. But people, when they sell a home, they want that money now. They need it. They want it. They don't want to wait 2, 3, 4 days to get a wire. It's almost expected they get it the same day, but we try to let people know that if you're receiving a wire, it's going to be the day post closing. The last thing we want to do is accidentally send those funds to the wrong place and then have to deal with an upset customer about getting the funds back. So we've always had
I've had that happen before.
Yeah, it comes back, but we've always had a policy that you bring us a voided check. Period. We've had it for 24 years. And I'll give my father credit where credit's due. That's probably been his one policy that I love, that I don't argue with him on, because it's kept us safe. And keep in mind, business email compromise schemes have only been prevalent probably for about 5 or 6 years. But since we've had that policy in place, we've never had an issue with
That's a great tip. A great tip. Yes, it's a small pain in the ass for the overall big picture of protecting it.
Yeah, it's your money.
Now, I have banks and title companies that I work with regularly. They'll call me to verify a wire. Is that as good?
So if you know your information off the top of your head, right? I mean, and they have your phone number, which I'm sure they do. So you'll put one in and be like, hey, I need this wired or whatever, and they'll call you to verify it. It's standard operating procedure at this point in time to call and verify.
So every time I do a wire fraud paperwork, especially with somebody that's a new client, I always have a story I tell. And we had an agent that came over from Seattle. Her name was Beth.
Okay.
And Beth had a deal, and it was a $1.5 million deal. And she got her client got the wire transfer information. They went ahead and transferred their wire. Well, it went right to Mexico.
Oh, yeah.
For $1.5 million cash on a purchase, and that money was never seen again.
Never recovered.
So I use that story.
Yep.
All right, Dave. Let's talk as a business owner of a title company.
Yeah.
Why? Why do you own a title company? Obviously, if you've done this for 24 years, it's a pretty good business, I would imagine.
It's a wonderful business.
You have multiple locations.
Yeah.
Let's talk turkey here. What is the benefit as a real estate
Yeah.
a real estate industry company, why title?
Well, I guess what you're trying to get at is there's a lot of real estate agents that team up and start title companies, but they have to partner with another title company.
Sure. Well, I'll talk about like me personally, and then we can kind of go into why title is appealing. It is a profitable industry, fellas. I mean, we all know it, right? But I got into the title and escrow in I would say I don't want to say a weird way, but a different way. So, just like all of us, when you're coming out of college, we have no plan, right? We're like, okay, we have our degree or we have our certain
I have
education.
my liberal arts degree ready to go.
Where'd you go to school?
Oh, no, I don't. I have a business degree, which is pretty much the same thing.
Well, no, I had a liberal arts business degree from Briarcliff University in Sioux City, Iowa.
That's hilarious.
Yep. So, but nonetheless, we all have those times in our life. They're transitional, right? High school to college into the real world, and you're trying to find your place.
Starting a podcast is our transitional point in our life.
More power to you. That's however we feed our families, right? So legit. My father traveled and was in sales and was home a week, gone 2 weeks, home 2 weeks, gone a week, and was in sales and traveled the United States up until I was about 8th grade, right? And then he was home. He became a Farm Bureau insurance agent in Tacoma, Nebraska. He finally found a legitimate career, whatever year that was. He made it.
Yeah.
Well, so him and my uncle had worked together in the sales job all their lives. And again, when they got tired of traveling, my uncle became a mortgage broker or got into mortgage. My father got into insurance. You can kind of see where this is going. Well, here, my uncle and my father have a great relationship, but my uncle is trying to close deals, and he's just like, hey, these title companies or these escrow companies, they suck. They won't return our phone call. I have a clear to close. I wanted to get something scheduled. We can't get it done, So he influenced my father to add title insurance to his P&C business. Well, we all know that doesn't work, but my father being who he is, brash, ballsy. I love my dad. Again, work with him every day. If we get to a point where we talk about mentors, my father is going to be one of my mentors. But so let's just say from the time I was a freshman in high school to the time I graduated college, about 8 years, my father researched a way to bust into the title insurance world and escrow world to add title insurance to his P&C business. He got that done my senior year of college, and here I am. I'm up in Sioux City. I wrestled at Briarcliff College or University now in Sioux City.
A subtle flex there.
Yep.
Yeah.
Yep.
No
college
big deal.
wrestler. Yep. Don't
What weight class did you
149, baby. Can you see that? 157. I'm 230, 240 now. So
I was just say 130, 140.
Yeah. No. Nonetheless, I had no plan. I was just your average young individual. I got a business degree just because, again, it was broad. I didn't focus on anything, but I knew I would graduate school and I would get a job, insurance, sales, something. So, but at the end of the day, I needed to leave Sioux City. I love college. I live college to the fullest. I have great friends, but I love to be social. But I was probably staying up a little too late at night and partying a little too much. And I knew morally that it was time to leave Sioux City. I was graduating. I was done with wrestling. So I moved home. I moved to small town Tacoma, Nebraska. It's time for me to change. It's time for me to get back to my roots, right? So I moved home. I moved back to Tacoma, Nebraska. I moved in with my parents. And at that point in time, my father was starting Midwest Title. Well, I went to his office where he had one assistant, and he goes, "Hey, I'm starting a title company." I actually wasn't working for him full time, but I was going in and working for him part time to earn additional money. I was helping some ag producers that owned hog confinements. I was power washing hog confinements. I was just kind of at home working.
Fun.
Yeah, working. and my father's like, "Hey, this working for this title company sounds pretty appealing, right?" And I'm like, whatever, So I'm like, I went into work for him. And there's more to the story than what I can have time to tell now. But at the end of the day, I went to work for him temporarily. And here I am 24 years later, still working for him.
It's like when people I'm just moving back home for a little bit. And then 20 years later, they're still in Omaha.
I joke.
It just gets its hooks in you.
I joke with people that I went home and I went to get my feet underneath, but I went to my dad's office to utilize his resources to work on my resume. Here I am 24 years later working on my resume. But the real estate industry, it's been it's been life-changing for my family. The title and escrow company has been a godsend. I can remember being young, and just like everybody, your parents are doing their best to make ends meet, to support their families and whatnot. And that's just like my dad with sales and the insurance company. But my dad's whole goal in starting the title and escrow company, he was hoping to do 20 deals a month, and it was all going to get fed from my uncle's mortgage brokerage. Well, example, during COVID, we were doing 800 deals a month. So we had grown
800?
Yeah, you bet.
Wow.
So here's Midwest Title's mantra, right? Plain and simple. This is what has made Midwest Title. And it's not a trade secret because everybody knows how we operate. All our competitors know how we operate. And my uncle just simply said, if you would go to the consumer and close at a time and location that's convenient for them, kind of run your own notary service per se, then you'll have success. And for a lot of years, we dealt with mortgage brokers and lenders, and I would be doing closings at 7, 8 o'clock at night at the people's home.
You do too.
When they're home. Yes.
I can totally say it.
Yep.
I mean, I've appreciated that for years.
And we've had that. We still have that philosophy today, but COVID kind of changed things, and that's again another topic that we can dive down or go down at some point in time. But that's all it was. If you just answer your phone, so you have my cell phone, you have my cell phone, everybody has my cell phone. Answer your phone and keep an open, convenient closing schedule. You'll have success. So we've exceeded that goal of 20 closings a month. And now it's 50 a week, it's 60 a week, or when the interest rates dictate, the business picks up. And so we've had success. So I was kind of thrown into it. I'm the oldest child, I guess I just have that. We are a close family. My brothers still work in the business, work with my dad. My customers become my friends, which friends to me are family. You have that innate responsibility to do what's best for the transaction, for the customer, for the homeowner. And we work hard, and people know they can rely on us, and therefore our business has grown over those years.
So going forward, can you be REIA Radio's phone a friend if we have a title related question?
For sure.
It's official.
For sure.
Well, and just so the listeners here, we really wanted to have very specific conversations with people in industries, title obviously being one of them, and have a deep conversation about this. So there's more understanding about what you do. Now, full disclosure, you're a sponsor of our local REIA, our Omaha REIA group, and thank you for that, for being a long-term sponsor.
Appreciate what you guys do for us.
But this isn't an advertisement piece. There's no pro bono going on here. But we wanted Dave to come in, talk to you guys, help you understand what title was, how they benefit to you, and just have a better understanding. So thank you for that. I appreciate it so much.
You bet.
And as I'm thinking about it here, Owen with Liquid Lending, you're a sponsor of local REIA. Midwest Title is a sponsor of local REIA. We have DB Video over here, sponsor of local REIA. We have Timber Creek that's editing it, which is a sponsor of the podcast. Yeah. So thanks guys for everybody.
Sure. Little Omaha REIA love in here for you, buddy.
For sure.
Well, we have a section that we famously call Failing Forward.
This Failing Forward is brought to you by Magic Door.
Magic Door is the AI-powered property management platform designed to handle everything from the rent cycle to the vacancy and maintenance cycles. During the rent cycle, Magic Door collects rent, sends automatic reminders, deducts management fees, and distributes payments to owners. In the vacancy cycle, Magic Door streamlines listings, tenant applications, seamless multi-language communication, screening tenants, and converting applications into leases with one click. And for the maintenance cycle, Magic Door's AI handles everything, asking tenants key questions, assigning tasks to vendors, and scheduling repairs automatically without you getting involved. With no hidden fees, no onboarding costs, and seamless AI-powered automation, Magic Door takes care of the entire property management lifecycle so you can focus on what matters most.
Well, this is a segment that, where you had a failure in your personal life. We prefer a real estate conversation here, and that you had a learning lesson to come out of it.
For sure.
And you have some good stories about your real estate career.
Yeah.
And is there something that we could specifically talk on that you had a lesson?
For sure. Because my father nor I work for another title company, we made lots of mistakes. I think there's a fun one that to kind of talk about that I think all the investors will appreciate, and the audience of the podcast will appreciate. So we did a transaction in 2002, 2003. Remember, we've only probably been in business for 2 years. And I had to been more than that because my brother was working for us at this point in time. I'm the oldest. My brother's 2 years younger than me. He, of course, was the same situation I was, looking for what he was going to do in life. And I was getting a lot of work subbed to me from a title company called Liberty Title. And do you guys even remember?
Oh, yeah.
Liberty was, they were the shiz. They were a great title company. They were busy. We were a little title company. They were subbing work to me. So my brother Brian went to work for that title company and really got trained and really did a good job. Got a great job of learning from a different title company. But nonetheless, he came to work for Midwest Title. And we're doing a transaction in 2002, 3, 1, early 2000s. And there's code violations on a property from 1985. All right? So 17 years later, 15 to 20 years later, code violations are sitting out there. My brother, these are taken care of as a researcher. These can't be out there. He unexperiencedly wrote over them, and the purchaser got a home inspection. The home inspection listed out all these items that were still code violations, and still they bought the property regardless. And so we closed on the property. Well, 2 years later, this individual who bought the property decided to sell the property, and the next title company, who was way more experienced than we were, called out these code violations. And we're like, whoa, your home inspection showed these. You still bought it. Yeah, we closed on it. But she was a female, said, no, you fixed these violations. We fought it, we kicked, we screamed, but we ended up paying for those violations. And remember, 1985 was when these violations were originally filed. It's 2003, 4, 5, 6.
Jeez.
So the city came in and not only cited the old violations, but they pointed out all the new violations.
Oh, man.
And those fell back on us as well. So $8,000 later that we paid for to have this home brought up to code, this individual was able to sell the home. And now we know that it doesn't matter how old these code violations are, because everyone thinks they have to fall off or get fixed. But if you have a homeowner who doesn't address a code violation, they never go away. And the city holds the hammer.
They have a long memory.
They have a long memory.
They always get their money.
And I've learned to appreciate the city, but when you're talking about these code violations, you have to address them. If you're an investor, you need to research. If you're buying a property as is, whereas, and you know it's a home that needs love. But if it has code violations on the title, you need to research those code violations to know what you're getting into. Because if you're getting a smoking deal, the violations may make it so that it's not such a smoking deal. And I had an great investor customer. I mean, these guys are successful. These guys this is a separate story. This is where Midwest Title didn't pay, but we had an investor who does 20 homes a year, 30 homes a year, had probably 10, 20 purchased in rehab mode. They got called out by the city, and the city tagged one property or found violations. I think what they did is they opened the home up and they didn't pull permits. Mm-hmm. When the city found that, they went and tagged all their properties. Boom.
I have a client I'm working with right now.
Yes.
And it's an active listing.
Yes.
And he did a full remodel.
Yep.
He's out of state.
Yep.
Was not aware that the contractor didn't pull permits. Now, the city did a rental inspection. Mm-hmm. And upon that rental inspection, they said, no, we want, it's a 3-unit and it's a conversion. They went, we want separate furnaces. Mm-hmm. So he had to put 3 electrical furnaces in, and then he had to rebuild a retaining wall because there was an arch to it. And then with the electrical updates and everything, he was almost $95,000 into this rental inspection issue on a fully remodeled property.
Yeah, play nice with the city.
So, but this gets better. So we have the property sold, full price offer. We actually have multiple full price offers, And then all of a sudden, the cities, we thought that, because I'm only going by the property manager and everybody else, but then we come to find out that that they came and did a re-inspect to make sure everything was good. Well, and upon the re-inspect, they saw that the plumbing, I don't know which way it went, but the plumbing going to a sink was different than what they saw in the utility room. So one was like copper and one was PVC. So like, commingled pipes. Well, they didn't hire a licensed plumber. My understanding is the city cut a hole somewhere, saw that the piping was different, and now because they didn't pull permits, is requiring that every single water, even though there's no issues, every single water line has to be torn out of this house, including the water lines that are actually running through the concrete floor that were poured.
Yeah, the funny thing, in most municipalities, city issues aren't covered by title insurance because the title insurance only covers items that are filed in county. But the way Omaha works is they cross lines. The Omaha city can file violations in the county records and how they tie together.
So now we have a plumbing company came out. The upcoming repairs are $30,000 more. Plus, it's going to be $10,000 to repair the flooring and all the drywall. Yeah. And we have to vacate all the people out.
Yeah.
Okay, I'm in a small rant, quick rant.
Yeah.
I have just like idealistically a huge problem with this. I think it's a giant overreach of authority. And I
agree with you.
I think it's complete bullshit, honestly, where you can get nailed for something that someone else did before you bought it. And also, what are we doing here? Yeah. The whole country is up in arms about lack of affordable housing, and you're walking into a house that has perfectly functional plumbing, and you're saying tear everything out.
And it's a nice place.
And by the way, I have no problem with wrecking your complete financials by charging almost $100,000 to repair stuff that's working just fine. Yeah. What are we doing here? So let's cut out all the bullshit and the red tape and just say, is this house functional? And or I'm surprised that city or municipalities haven't been sued in a class action where investors have gotten together and said, guess what? If you're doing rental inspections, you should also be doing, in general, home inspections. Yeah. Because what is the difference? People are living in a box with walls. Yeah. Does it matter if they're renting it or if they own it? Does it really matter? I mean, in the big picture of things. So if you're inspecting one and not the other, why? Yeah. So if they're going to do that for and hold investor feet to the fire, or landlords that own properties feet to the fire, do it for everyone. If their whole platform is, we want housing to be safe, and they're shaking the torch or whatever, or banging the gavel, whatever proverbial.
I've never thought about it. That's a great point.
Yeah, like, why are you not doing that for everyone that lives in a house? Yeah, of any type. Just do it across the board. Like, what is the difference if I'm renting or I own it? It does not matter. My living isn't going to change. I live in this house. Yeah. Does it matter if I pay you or pay the bank? Who gives a shit? Yeah. Like, I rant almost over, but I
agree.
It's so stupid. Like, why are we not just inspecting homes and just saying, hey, homeowner, you have to do a $95,000 repair? Could you imagine the outrage there would be out there if you went into a 90-year-old's house and said, oh, by the way, that's sweet that you've lived here since 1950, but you're going to have to repipe your entire house for $40,000 and rip up flooring and... Yeah. And we're going to update everything. It's complete bullshit. I can't stand it.
But now we're at $145,000 on a fully remodeled house.
Yeah, well,
that doesn't include the remodel that he did on a house that's worth $260,000.
Yeah,
it's complete overreach.
Well, they came in and found new ones. We took care of it. $8,000 is what that cost Midwest Title, and not as a title claim. That was paid for separate. And the investor friend who's your size, Owen, like I said, they probably had 10,
like 5'11", 185.
Yeah. I'm having crazy deja vu right here.
$1 million. It would sink most investors, and these guys weather the storm. They're fine. This happened 3, 4, 5 years ago, but the city went in and tagged 20 of their properties, and before they could sell them, they had to have the city inspect every one of them.
They do that. Like I had a bad contractor on one property, and then they started going to every one of my properties. And all of a sudden, I got tagged for a tree that was and I'm like, I brought this up in a previous podcast, you know, when I was having my freak out session, because they tagged me because of some decking issue. And then they started going through my LLCs. And then I had another tree, and they're like, oh, this tree is too trim. You gotta trim it down. And I'm like, and I looked down the street of this house, my house, and it's 1885.
Yeah.
And I have
trees from 1900.
No, this is a baby oak tree. This tree is like 4 years old, and I'm looking at the trees that are up and down the street, and the one that's collapsed in front of me that's half cut down because it crushed a car, and they didn't make them cut that down.
Yeah.
And I'm sitting here and I'm like, I have the most trim tree on the street as I look up and down the road.
I knew my family
pick your
would hit
battles.
hot buttons.
All right, Dave, this has been, so informative.
Yeah.
Like, this has been packed with both stories and good information on, fraud prevention and just the nuts and bolts of it.
It's kind of like reading a book. If I read a book on real estate investing, I like the books that tell a story behind it, not with pictures or graphs. But, you know, and I think I gave this example once. It's kind of like listening to Jocko Willing. Like he has these points he makes, but he always tells a story behind it. And I think that's what we got today.
Yeah. I appreciate it. Well, this was impromptu, and I just want to tell you guys I appreciate being on the podcast. You guys are truly two people that I look up to. I really enjoy the podcast. Everybody that you've had on the podcast, I look up to. I love listening to. So
every one of them?
Yep. A lot of them. Yeah, a lot of them. But before we finish up, and I know we're going to go into the OT, so we're on the downhill slide, but I just want to tell you guys how much I appreciate you guys having me on the podcast.
Thanks, man. We appreciate you.
Very much appreciate it. Thank you.
Yeah.
Well, with that, you made mention of our last segment of the show, which we call the
OT with Owen and Ted. You are in the OT with Owen and Ted, presented by JM Real Estate Capital.
Hi, it's Rob, JM Real Estate Capital. We're the money guys that you need to know for all your real estate investments. Talk to us. We can do what your local bank can't or won't do. We don't have millions, we have trillions with a T to lend. 844 we close, or go online at jmrecapital.com. That's jmrecapital.com. JM Real Estate Capital, smart solutions for the real estate investor.
Where we cover the same questions with every guest, plus or minus a couple. The first one that we've got for you is, you're writing a book, cranking this bad boy out. It's your labor of love.
Yeah.
What's it called and or about?
The Uphill Climb.
Okay.
You know, it's just about life, you know, as a person, just about anybody. You know, I kind of touched upon, you know, in earlier about the transitional periods that we all run across post high school, and then post grad school, whether you go on to college or whatnot. But getting out of your comfort zone, here you are, you grow up from the time you're in elementary to through high school, you set goals and you learn to achieve, and you go through regimens to achieve these goals, whether they're athletic, whether they're academic, just whether they're goals in life. But you're always continuing to learn and climb, and you really don't realize or learn until you fail or you achieve these goals. But then when you hit post school and you leave home, you leave the comforts of mom and dad, you know, you're still climbing, right? You still have to achieve goals. And then, you know, you set goals, and they're professional goals, they're marriage goals, you know, and then you have children, so on and so forth. So you're always continuing to learn and grow. But I'm at an age now where, you know, I have true friends, best friends that are getting into public speaking, and they're talking about their lives and the lessons they've learned. And you really learn that life, you never really hit a comfort zone. You're always growing. I think it's just human nature to always be growing. You can hit a goal and just be in the best place in life, but you don't sit too long, right? So
you probably get that from your dad, don't you?
Yeah, I do.
Yeah.
So life is always an uphill climb, and it's always about achieving goals and making yourself the best version of yourself that you can possibly be. So,
I like that.
Okay, so we're sitting here. We're on a podcast. It's called Big D Welte, and you can interview anyone in the world today.
Wow.
Yeah.
Who's one person you want to interview, and what's the one question you'd like to ask?
You know, I'd have to interview maybe Donald Trump.
Probably one of the most common answers, to be honest with you. Yeah.
Is it? But there's a Democrat, someone that would lean more left that I want to interview. Who's the owner of the Mavs?
Oh, Mark Cuban.
Mark Cuban.
Yeah.
You know, like, I don't support career politicians. I'm not going to tell you right now on the podcast whether I'm Democrat or Republican. but I don't like career politicians and what career politicians do to our society and our world. I truly believe that it takes somebody successful. It would be great if somebody successful would step in and run our country. And I truly believe Mark Cuban, I don't know this, I can't quote this, and I know we're going on radio, which side of the fence he falls on. But
he's a Democrat.
He's a Democrat. Yeah. Okay, so you know that. So I probably lean more right, but I think I would vote for Mark Cuban, Go ahead.
I just wanted to say, this morning I was walking my dog, and I was thinking of, like, I made mention of this on our Monday episode of the Real Estate Rundown, but, like, I don't like either choice that we have right now, regardless of my political affiliation.
Correct.
I was thinking of who would be my top write-in votes.
Yeah.
And one of the guys I thought of was Mark Cuban, regardless of his political leanings. Okay. In the interest of covering my ass, in case he comes out with a P. Diddy situation.
Yeah.
Everything that I know to date about Mark Cuban and his shtick on Shark Tank and all that, I generally like.
Yes.
And I like his angle and his the way I like the way he does business, I guess is what I would say. Now, whatever happens after today, I don't know, but up until this point, I totally agree with you. I like his jam.
And you guys are asking me this question. It's the environment that we're in. Like, you could ask me this question maybe next year, and we wouldn't be in the political landscape that we're in.
Yeah.
But I am tired of being.
This will air just about 4 days after or 3 days after the election. By the way,
that's all good. It's all good. I'm tired of getting it stuck to me. You know what I'm saying? I mean, we are hardworking individuals. Everybody listening to this podcast, I know, is self-made, hardworking, genuine individuals. So who would I interview? I would interview Donald Trump because he is not a career politician. Not because that's who I'm voting for, because he's not a career politician. And I would ask him, what are you truly going to do for us? And maybe if I had the choice, I'd interview Kamala. So they'd be side by side, and they'd have to tell me the truth. Hooked up to a lie detector, trim the fat from all these bills, and just let's be leaders. What are you going to do for us? Because I'm tired of getting lied to. I'm sure you guys are too.
I have a great idea.
Yeah.
On any future debate, I think we hook both debaters up to a lie detector, and also when they lie, it shocks them.
It shocks them.
Wouldn't that be awesome? Like a dog collar, they're just wearing one of those shock collars, and they're like,
because guys, our taxes,
so awesome.
Our taxes continue to rise, right? I was visiting with Steve Menino before I walked in here, and we were talking about how just expensive it is to go out to dinner, to buy groceries, and I'm tired of them coming and saying we're going to pass this bill with all the fat, all the BS.
It's stuffed with other initiatives that you're like, what even is this?
When are we as, and we can't revolt, right? Our military's too strong. But when are we as consumers and taxpayers gonna draw the line and get tired of all the BS? So again, I'm not telling you if I'm voting for Donald Trump or Kamala. I want to sit down. I would interview a good candidate and learn what they're going to do for us so that we can be successful as individuals.
But you're not going to get there. All you're going to find out is the social stuff, and you're not going to get into the meat and potatoes.
All right. Another question for you. So we're at your funeral. Very sad. Somebody's coming up to the podium to tell your eulogy.
Yeah.
Who's doing it?
Gosh.
What do you hope they say?
I am hoping that my wife... I precede my wife, right? You know what I'm saying? So, right? I passed before my wife, right? And I'm hoping that I pass.
I'm sure she does too.
Yeah. I'm hoping I pass before my children, But let's step outside the box, and I have a very close friend. He's somebody that if you guys ever needed to venture out and get somebody non-real estate related into the podcast, his name is Buck Rasmussen. He's just a close friend. He knows every deep dark secret about me, and I would like him to give the eulogy. And I truly believe that he would say some really nice things about me because, again, he and I achieved goals together. We've walked that uphill climb, that book together, and we're both in really good places in our life. And he's had a lot more challenges in life than I really have through different challenges with really things out of his control, like his father passing. I've not lost anybody close to me. I still have both my mother-in-law and father-in-law. I still have my mother, my father. I still have my brothers. I haven't had any of those really hard hit things in life hit me, which I know are coming because we all know they're coming, knock on wood. But he's had a wife with cancer. He has a baby or daughter now that's 16, 17. That's type 1. He had diabetes. He's lost his dad. He and I have known each other since 5th grade. He's a undefeated state champ in wrestling. He played at UNO. He actually had a stint with the Patriots. Again, he's a great character. I guess I'm rattling off all his accomplishments, but he's just a close friend, and he's genuine and he's real. And I think from a peer standpoint, he would tell you that David Welte was a caring person that wanted to do the best for his family and the world and the people around him to help them succeed and whatnot. So
I'd get up there and say, hey, once a year, this guy likes to go have a few drinks and have a good time.
Yeah,
so,
and I do that too. And he knows that too. So.
Well, I think I know the answer to this one because you already answered it. But what mentors in your life has had the biggest impact on you, and how they influence your personal career?
You know what? I mean, my dad truly, because we're so close as a family too. I mean, you go back to the foundational part of your life. There's some wrestling coaches involved. We all have to go back to our foundation and talk about high school and what high school had to play. And like I said, not all goals have to revolve around being an athlete. There's academic and so on and so forth. But I really worked hard to be a successful high school and college wrestler, and those foundations made me a great business person. So there's some wrestling coaches there, but bottom line, my father, my dad, I'd do anything for him. Right or wrong, indifferent, I'd walk through fire for him just because I witnessed the sacrifices that he made to make us a good family, and what he did for us. So
I recently ran into my wrestling coach in elementary school, which was actually my first grade teacher.
Yeah, and
he was the hardest teacher I ever had in my life. And I ran into him this weekend at my son's football game, and I cannot believe he remembered me.
Yeah. Yeah.
And it's the only elementary school teacher that I still remember their name.
Yeah.
And I was like, Mr. Moore, what's going on?
Was he like, Ted, you've grown out? I mean, up.
Yes, that's exactly what I said. And I said, you've grown from red to gray.
Well, Dave, this has been amazing. Super entertaining hearing all the stories around title work, but this has been very informative too, and I learned a lot today, even as a part owner of a title company for a brief amount of time.
Yeah.
You dropped some really good advice here for people out there that are transacting real estate. But we have one more question for you, and that is how can somebody catching this episode connect with you, reach out to you? Are you looking for anything in your business now that other than more business?
Other than a Council Bluffs location.
Yeah. We'll get there.
Sad emoji.
I am never too proud to say that I'm a know-it-all per se. So, I love the podcast. I love what you guys do. I love hearing about others failing forwards and whatnot. So, from our standpoint, again, I'm not perfect. I've made mistakes. I've failed forward. Young individuals who are looking to get into the real estate world, if they want to know more about title, my cell phone number is 402-699-1857. I'm not scared to share that.
Because as we grow bigger, that people have not given their phone numbers out. So that's something.
So, and that's why I did it. It's because I had to show you that people are more than welcome to call me at any point in time. So if you get voicemail, text me. Because again, I want to help you be successful. If I surround myself by successful people, I myself will be successful, and I want to help people grow. Me being 45 at this point in time and 24 and 24 years into the business. I remember when I was 21 and 1 year into the business, and I can talk about all the things I did that were successful and things I did that were not successful. What I would be looking for, I like to surround myself from good people. So any recommendations on podcast, and it'd be low lying if I said, hey, yeah, send me a deal. Call me on a deal that I am not the title and escrow company on. And if you're having issues, call me and I'll give you my opinion. And if we can help you, we can. If we can't, we can't, So but to give you perspective on how the current title company is handling the situation. So I know that I can't be everybody's number one title and escrow company, but if I can be my base customers number one, but others number two, we grow in business together. That would be probably where I'd go with that is what I'm looking for. And
you're okay being the side chick is what
I
you're
am.
saying.
You bet.
Create the relationship and the business will come.
Yeah. The 2 a.m. call. It's all good.
well, Dave, thank you for coming in today. I've been excited to talk title with you and let our listeners learn more about that. And thank you for your long-term friendship and your long-term relationship with the local REIA group also.
You bet.
And with that, Owen Dasher, we see us out.
On behalf of Aiden Bear, REIA Radio, and Ted Kosh, I'm Owen Dashner, and you've been listening to Dave, the Weird World of Wire Fraud and Abstracts.
Cheers, gang. We'll see you soon.
Sign off.
Friends call me Dave. My family calls me David.
Okay.
I didn't even realize it till my wedding, and that's a side story. So,
all right, David.
Yep.
When I talk about David out there publicly, I say David, and then when I talk to him in person, I say Dave.
Yeah. Okay.
That's funny.
He's Dave to me.
Yep.